Are you wondering why the shiny new car you've had your eye on suddenly seems more affordable? The biggest car market crash of our lifetime has started, and it's set to plummet auto prices by a staggering 50%. With factors like supply chain disruptions, a shift towards electric vehicles, and a decrease in demand due to the pandemic, the auto industry's future is uncertain. In this video, we'll take a deep dive into the current state of the car market and what it means for you as a consumer. Brace yourself for this eye-opening revelation that could save you thousands of dollars on your next car purchase. Please support our channel with a thumbs up and don't forget to subscribe to our channel. The automobile industry is undergoing a significant change due to an easing of supply chain pressures, leading to an increase in vehicle availability. However, this shift has resulted in a sudden surge in inventory, which has caused an unprecedented and rapid decline in vehicle values. This decline is happening much faster than anticipated, as dealerships struggle to keep up with the growing influx of new vehicles. As a result, the market value of cars is dropping at an alarming rate, with some vehicles losing up to 20% of their value within the first year of ownership. This trend is expected to continue until the industry finds a way to stabilize its supply and demand dynamics, which could take several years to resolve. Furthermore, it's probable that this shift in the car market will lead to further changes, such as increased competition and consolidation among dealerships, as they seek to find new ways to stay profitable in an increasingly challenging market. As stress on the auto industry's supply chain lessens, the market now sees the opposite of scarcity, an overabundance of inventory. However, this unexpected increase in supply has resulted in a steep fall in car values. UBS has released research predicting that global auto manufacturing would outpace sales by 6% in 2023. This results in almost 5 million automobiles needing price reductions to clear the market. At the same time, it's possible that these reductions in price won't come until the second half of 2023. Experts and analysts have recently predicted that the automobile industry will face a severe collapse. This forecast is no surprise, given the unforeseen events that occurred in early 2020, which rocked the global economy and led to shortages of essential goods. The automotive market was hit hard by these disruptions, and one of the primary culprits was the worldwide shortage of semiconductor chips. This chip shortage has devastated the car market, forcing numerous manufacturers to cut back on production or even halt it entirely, resulting in a significant reduction in the supply of new cars. As a direct consequence of this shortfall, consumer demand for used cars has skyrocketed. The pre-owned vehicle market has seen an immense surge in popularity as buyers scramble to find available models. Furthermore, with the reduced supply of new cars, prices for used ones have soared, reflecting a dramatic shift in the automotive market. The current economic uncertainties have aggravated this trend, as many people seek alternatives to buying expensive new cars. In addition, the pandemic has also affected the car market, exacerbating existing issues. The economic upheaval caused by the pandemic has impacted consumer spending, and with many households experiencing financial uncertainty, many are turning to used cars as a more affordable option. Dealerships had to adapt and keep selling automobiles while being physically hampered by lockdown procedures. They could not run the company physically but needed to process sales to stay afloat amid the recession. Restriction measures were implemented, and businesses would return to normal in 2021. Both the new and pre-owned automobile markets saw significant price increases after that time. The worldwide shipping chip scarcity and the resulting disruption have had long-lasting repercussions on car buying. These results have been seen over the previous 24 months. According to the data, prices have begun to decline after reaching record highs in 2022. The market for new and second-hand automobiles is currently more favorable than a year ago. Car prices have risen dramatically over the previous 3 years, creating what some analysts call the greatest bubble in the industry's history. However, a look at the figures suggests that the bubble is set to burst, which will cause a steep drop in vehicle prices. Some experts estimate that the decline in value of some automobile models will be dropped by 88%, and that decrease has already begun. Used automobile prices have skyrocketed due to growing demand and inadequate supply. It's also worth noting that geopolitical developments are currently causing chip scarcity and therefore affecting the automobile sector. Car lots have begun providing zero-interest loans for up to 84 months to persuade customers to buy. To clinch transactions and entice clients, these longer payment periods were essential. Car dealerships have begun offering attractive finance and lease options to attract new customers. To make purchasing an automobile more alluring, these packages also contained a number of bonuses and reductions in price. As the global car market experiences a dramatic shift from limited supply to an overwhelming flood of inventory, the question on everyone's mind remains: when will the inevitable crash occur? Expert analysts reveal that a significant correction is already beginning to unfold, with the impending collapse touted to be more severe than the auto market crisis of 2008. Even as supply chain pressures ease, the sudden surge in inventory has led to a rapid decline in vehicle values, happening much faster than initially anticipated. This rapid market shift is causing widespread concern among investors and automobile industry professionals who fear the impending financial fallout. Despite the current state of the car market, the future is anything but clear-cut. With so many variables at play, including shifting consumer demands, global economic conditions, and potential supply chain disruption, predicting the exact timing and severity of the market crash remains an elusive goal. Nonetheless, industry experts continue to study and monitor market conditions, hoping to gain any insight or advantage that might help us all weather the storm. Manufacturers of automobiles are getting ready for a possible pricing war. Several companies producing electric vehicles have already begun offering price cuts to customers. According to UPS, the price battle in the electric vehicle market has already begun. It is expected to expand to the internal combustion engine market by the second quarter of 2023. Tesla's recent price reduction for its new automobiles is a striking example of the falling values in the auto sector. For example, since the beginning of this year, the Tesla Model X's value has dropped by almost $14,000, or around 23%. This aligns with the ongoing pattern of declining prices observed in new Tesla vehicles. The value of secondhand Teslas is decreasing too. One used Tesla model that appears especially vulnerable to the continued downtrend is the Model 3. Used Model 3 vehicles are now almost $11,000 cheaper than a year ago. Similarly, falling costs aren't exclusive to Tesla automobiles. In 2022, for example, the typical secondhand Infiniti QX80 cost $52,874. Within only a year, the used car market witnessed a considerable decline in the price of the highly sought-after large Infiniti SUV. The price of this vehicle has decreased by an alarming $12,000, giving it an average price of $41,094 in April. This substantial drop has amounted to a percentage decrease of 22.3%. As if this decrease in the price of the Infiniti SUV was not enough, other renowned car models are also expected to follow a similar trend. The Nissan Frontier, a popular vehicle that sells at approximately $39,833, is also among one of the models that are predicted to experience a significant price reduction. By the end of 2023, this model is anticipated to drop in cost to about $27,146. Industry experts have projected a period of turbulence in the market for pre-owned vehicles, with significant fluctuations in pricing predicted to ensue. One telling example of this anticipated volatility is the Toyota Camry, whose 3-year-old models currently command a lofty price tag of $27,404. Should these projections hold, however, we can expect to see the value of these vehicles plummet to as low as $16,548 by the end of 2023. This represents a sharp price drop and highlights the instability that we can expect to encounter within the used car industry moving forward. The year 2020 saw a significant surge upwards of an 88% increase in the value of used vehicles, which has caught the attention of car enthusiasts and investors alike. However, this trend may not persist for the coming months, as there is a possibility for a substantial decline in car values. As a result, it is recommended that individuals brace themselves for this market shift, especially those considering either buying or selling a car. Despite the potential decrease in car values, the present scenario can benefit those seeking to buy a new or used car. This is because it's an excellent time to sit back and watch the market closely, keeping an eye out for any fluctuations. This can present a prime opportunity to secure a great deal, which may not have been available in previous years. Hence, it's important to note that the present market dynamics may shift, and we all must prepare accordingly. Waiting for the right moment and watching the market can present an ideal chance for people to get a reasonable price on a car. Thanks for watching. Please like, subscribe, and comment below, and watch this one as well.